Hey guys, just wanted to, it's Monday, so this is a video I'm doing right now at 3:49 p.m. About to go to the gym and work out, but wanted to cover property taxes and explain how they're done and some questions you might be getting from your clients or answers that you'll have in the future to your customers or clients when they ask. So property taxes at closing, we're talking about a buyer and a seller. Property taxes at closing, there's always a debit from January 1st of that year to the day of closing. That debit is to the seller, and then it's given to the buyer as a credit. If the buyer is not going to have an escrow account, it's applied as a direct credit towards their closing costs. If the buyer has an escrow account with the lender, then it's going to be taken and put in the buyer's escrow account. So they'll always have a start of at least the number of months the seller lived in the home. So for example, if somebody's closing the end of June, the title company will debit the seller January 1st to the end of June. If property taxes were $12,000 a year, that'd be $1,000 a month. And that means that 6 months, January, February, March, April, May, and all of June will be debited to the seller. It will be given as a direct credit to go to the buyer's mortgage company if they have an escrow account. So the buyer would have 6 months in an imaginary savings account called an escrow account before they make their first payment. And then obviously the mortgage company, they collect about 2 or 3 months from the buyer. So there'll be a good surplus in there. And then they start collecting a 12th, and then the property tax are paid at the end of the year by the buyer. Every once in a while, what you'll see is that I think it's right around the end of May or May 15th that property taxes are certified for the year. Well, let's say that the homeowner, the seller in January to May that owns it, they don't protest their taxes. Okay. Well, that's what the tax is going to be for November of that year. But the taxes are still going to be debited the day of closing in June based on the year before. So for instance, somebody's closing June 29th of 2023. The taxes that will be prorated from January 1st to June 29th, that's going to be 2022's taxes. Even though the taxes have been certified by the end of May this year, they won't be sent out until right around November, latter part of October, November, December. So the taxes will be debited from last year. And it could be that this year's went up. So it could be that a prorated amount from January 1st to June 29th under this scenario is due from the seller to the buyer, because the title company would have collected too little taxes for 6 months when the real tax amount came out in November. Okay. In that scenario, the title companies generally don't get involved. That's going to be worked out between the buyer and the seller. So when your client calls you, you need to let them know, hey, I'll do my best to reach out to the other agent to get the information. Maybe the title company will give the information to the client on the other parties where they've moved, but you're kind of out of it at that point. That's worked out between the buyer and the seller. And just remind them that at closing, they signed something to that effect. So the title company will give them a document to sign at closing that the taxes were based on last year's taxes. If this year's come out higher, then it's between the buyer and the seller to work that out between them. And worst case, it means that the clients will get involved legally with each other to try to get that difference paid if it's a huge amount. Every once in a while, the flip happens where the seller is debited for an amount from last year and the taxes are less than what they were debited instead of more. And in that scenario, the seller could try to reach out to the buyer and ask for a credit back. Okay. But what I want everybody to understand is at the end of the day, that's between the buyer and the seller. And you can be a little bit of a facilitator and trying to inquire as to how to reach the other party, but that's going to be done between the buyer and the seller. And if they ask what would be the process if either client declined to pay the difference, you would seek legal advice. Hopefully this helps. And also remember that the new tax law went into effect where the values of homes as a primary residence on a deduction of what the school district taxes, they used to take 40,000 off the value and then apply the school tax rate. and now they're reducing it by 100,000. So that took effect immediately. And so you'll see that your clients will start getting some escrow analysis where they pay too much. They might get a little bit of a refund and also have their mortgage payment adjusted downwards, which will always make for a happy buyer that's turned into a seller. So y'all be safe and have a great week. And remember, our Christmas party is this Saturday at 6:30 p.m. at Glen Eagles Country Club. Go Cowboys.